Hey guys, welcome back to Stacking Stocks, and thank you so much for joining us today. Today we're talking about NIO. NIO is a Chinese company that is expanding throughout the world. They do have cars in other countries, by the way. But where's the harm in venturing in more and more countries? They reported a record quarter in vehicle deliveries. We believe they're doing really well. NIO is growing at lightning speed with deliveries hitting records month after month. In September, for example, NIO's global deliveries jumped 125.7% year over year to 10,628 cars, and the luxury car maker delivered double in the quarter through September. NIO currently sells three electric car models: the 6 or 7-seater SUV ES8, the 5-seater SUV ES6, and the 5-seater electric coupe SUV EC6. Here's the thing, NIO offers much more than just cars, and that competitive advantage appears to be playing out in NIO's favor. The best example is its battery as a service. So instead of buying a battery-fitted NIO car, customers can save more than $10,000 on car costs by buying cars without batteries. Instead, they can subscribe to NIO's battery service that allows customers to charge and swap batteries at its battery swap stations. We saw a documentary about this battery exchange, and it's pretty rare. You drive this car into a little garage, and it takes out the bottom battery, puts in a new one. No charging, you get a whole new battery. Actually, oddly enough, if you're driving a Tesla, you're going to find that sometimes you want gasoline, and you have to sit at a charger for 20 minutes. It can be annoying at times, but this battery swap thing is pretty rad. Other people argue that NIO is more than a car company. At the moment, they're not even a car company. The people say that it shouldn't be compared to other car brands because it's more than a car company. Our argument is that it's not an actual car, but it's trying to be a successful car company. Tesla does 10 times more revenue than even NIO does right now, but what we'll do is we'll look at NIO's financials. Where are they going? And then we can go ahead and make some sort of probable projection about their price moving forward. So if you had bought NIO, if you had watched Stock Mo last January, and he told us to pop the champagne during NIO's battery day when he jumped over $60 and you bought then, you were still probably upset with him. You know you bought the peak that got to an intraday high of $66.99. You literally bought the peak. So guys, NIO is in China. They have a big market to grow into, but it doesn't necessarily mean that it's going to be better for them. They're a $53 billion company with $4.2 billion in revenue, which is 12 and a half times more. As an example, the other car companies sell for around 0.5 times. So this is 25 times more expensive versus revenue. But before you put in the comments, don't compare this to a car company, let us know what we should be comparing this to. There are also people that are visiting because it was at 67 and now it's at 33. That's half. Last year, they lost $540 million. No cash flow in the last 5 years. Last year's free cash flow is negative $700. Since they don't make money, they have no return invested capital so far. Some people estimate that NIO will break profit in about 2 years. It has a relatively high level of debt. The general rule of thumb of debt is it shouldn't exceed 40% of your equity. This is 52%. But on the flip side, shareholders love NIO because there's a large cash balance pool. We'll check it out. Have you had a look at NIO's financials? In 2018, they did $7 million in revenue, and now they've done $4.3 billion. That's a huge growth, guys. Let's look at their profit. They lost $1 billion in 2018 to losing $538 million in 2021. So ironically, that's a check mark. Number of shares outstanding increased by 50%. Now this is terrible. They're diluting their owners. They're basically telling you that this stock is so expensive, but you guys are attached and you love the stock. We're going to issue more shares instead of taking on debt because you guys love it and you guys have no idea on how to read financial statements. You don't realize how bad this is, so we're just going to give you what you want. As electric vehicles become an integral part of our lives, NIO is giving solid competition to Tesla. While $1,000 a share Tesla stock is too expensive for many investors, NIO stock is a solid buy at $40. There's ample upside in the coming months. Countries are committing toward a better tomorrow, and this has led to a rise in the demand for EVs. China is leading the industry with 42% of the global EV sales in the first 6 months of 2021. The support from the Chinese government, a reduction in the cost of production, and high demand have boosted NIO's share of EV sales. Battery-powered cars are witnessing solid demand globally, and NIO could benefit from the strong demand in both its domestic market and newly entered European markets. With that said, what would stop NIO from dominating the EV manufacturing industry in the near future? All of this makes NIO stock a good buy before the third quarter results expected on November 16th. Let's dig deeper into the bullish thesis for NIO stock. NIO didn't disappoint investors in the first two quarters of 2021, and we believe it will report solid results for the third quarter as well. First quarter deliveries stood at 20,060 vehicles with revenue of $1.22 billion and a net loss of $68 million. In the second quarter, the company delivered 21,896 vehicles and reported revenue of $1.3 billion with a net loss of $90 million. The third quarter vehicle delivery numbers were higher than those of both of those previous quarters. It delivered 24,439 vehicles in the third quarter, much above the forecast of 22,500 to 23,500 vehicles. However, that may not have a huge impact on the net loss. NIO is also making inroads into Europe. Norway has the highest penetration of EVs, and the car maker delivered its first batch of EVs to that country in September. We may see a rise in the expenses toward expansion in future markets, but it'll be temporary. We believe NIO will beat analysts' expectations in the third quarter, and the stock will soar from here. The EV maker is focused on expansion and growth. It's managed to increase the production capacity of its manufacturing unit to meet the growing demand. This shows the potential of the car. Once the company provides further clarification about the mass production plans, consumers will be in a better position to choose a car that fits their price point. NIO is also offering a wide range of products to meet the needs of every consumer. It's expected that the company will launch a new car at NIO Day in December. The event could take NIO stock higher and reap returns, similar to what has historically been the case with Apple's new product intro. All in all, the company is in a strong position in the industry and it has massive growth potential. NIO stock has performed well despite the massive competition in the EV industry. The shares are up 48.3% in the last 12 months. New automakers are entering the market and the competition is heating up. BYD Company Limited is just one name to watch. Additionally, the industry is facing a chip shortage, but NIO has taken several steps to maintain growth in the long term. Besides the EVs, it generates revenue from the battery-as-a-service model, and this has attracted several users to its cars. NIO will soon enter the mass market, and will provide further details about that. With strong demand and a solid product line, NIO is here to stay. The company will prove its worth in the third quarter results and will not disappoint. NIO stock looks promising for the long term, and we think it's a buy before the November earnings release. That's our take on NIO stock, and we'll keep watching it. So stay tuned. Don't forget to like, share, and subscribe. See you next time right here on Stacking Stocks.